G'day there, well-pressed traders, investors, subscribers, and viewers. It's time for another Monday morning roundtable, and I'm joined, as usual, by Adam Sarhan, Jeff Yasteen, Roger Scott, and Jeff Zananiri. Gentlemen, welcome.
Hello.
Thank you for having us.
So let's start with, how about Jeff Z? Jeff, the markets are, a little sell-off today. Bitcoin did another heart-wrenching drop, and but other than that, it's pretty calm, quiet out there. What's your sentiment for this week?
Well, I mean, there's the 800-pound gorilla in the room, which is politics, which I will not address. But what's exciting and interesting on the horizon is we have earnings season, and the end of the week, you get a kickoff. It's usually the banks that lead us off, and we're going to see some big earnings reports from JP Morgan and the like. We talked extensively about Bitcoin last week. I use Bitcoin really as an indicator for what I think volatility sentiment is, high beta sentiment. So I wasn't surprised when I saw, because Bitcoin doesn't take a day off. When I saw Bitcoin started getting hammered yesterday, I thought the futures might be a little soft. Indeed, they were. And today we're seeing selling in some of the higher beta tech stuff not including the semiconductors, which are performing extremely well on the back of some merger murmurs, et cetera. But Bitcoin, 20%er? Is that how you store your wealth?
Yeah, I guess you have to have a high tolerance for volatility. Boy, I don't know if I could handle that. All right, Roger, what's driving the bus in your opinion?
What's driving the bus? Well, I'll tell you, James. I think this is the first week of the year where most institutional traders are back. A lot of traders like to look at the market starting from the third or fourth day of the year, but I actually like to look at it from the second week of the year because that's when things are really starting to move. So I think this week we'll see much more of what we can expect in January and February of this year than what last week gave us for obvious reasons. Now, in terms of market action, we've got big data all through spread out through Thursday and Friday of this week. We've got employment, we've got retail, we've got consumer sentiment. Again, my biggest fear, and I'm seeing a very divided market right now. I mean, traditional like Lockheed Martin stock is just breaking down. Interest rates are starting to long-term rates are starting to creep up. So we are starting to see the market move into a different climate, kind of a different rotation from one aspect of the other. Pot stocks have been doing well. What I'm really focused on right now is the low-hanging fruits, and I'm not really looking at the market as a whole. I'm looking at everything from a sector perspective. I think that's how we should look at the markets over the next couple of months to give us a good idea of where things go. And I'm still not very confident that the market is going to be overly bullish because I don't know if the market will react more to the forthcoming uncertainty of what the stimulus will be, or the potential fear of Biden doing a 90-day or 100-day complete lockdown on a federal level, which is not unforeseeable, especially in light of the fact that the House and Senate will be Democratic. And again, this is not a deep political discussion. This is just based on what I'm seeing in the market as it's unfolding right now, based on the action that we're seeing right now. So again, I would focus on the fact that technically the market is still overbought on a large scale basis. Technically, the large caps are lagging behind the smaller stocks, and cryptos and alternate assets are getting a lot of love right now. And I'm going to stick with that right now. In terms of shorting, I don't like the defense. I don't like the large-scale defense company, the Lockheed Martins, the Northrop Grumman. I think those companies are going to be breaking down, and that's also very typical when we have a Democrat in the White House. So again, these sector plays are working so well right now. I don't really see a need to kind of guess three steps ahead. I'm kind of sticking with what's on the table right now.
All right, Adam, so a question for you. I've been seeing increasing numbers of financial commentators referencing the indicators suggesting we might be in for a major market correction within weeks. And do you concur with that? Do you see anything to suggest that? How much of a threat do you see that as being in the next 2 weeks?
You know, I think it's a really good point, James. When you're an investor, you want to really analyze risk and reward. And it tends to be a pendulum that swings back and forth. Sometimes it goes a little bit too far one way and then it goes back the other way. Right now, if you ask me just based on probabilities, what's more likely to happen, the market go up or go down and pull back a little bit, I'd say with the overwhelming probability is we're probably going to pull back. The markets don't just go straight up. So that being said, I actually had a hedge go out. We bought some puts in the market for Alpha Trade just last week on Friday, just to protect from that inevitable pullback. Will it happen today? Will it happen next week? Who knows? But as we mentioned earlier, earnings season is front and center, and that could be a perfect catalyst for the market to pull back. And then, of course, we've got the political transition of power coming up in next week, and that could also be another catalyst for the inevitable pullback. But, you know, will the market pull back? It's almost guaranteed. It's a matter of when it will pull back, not if it will pull back.
Right. Okay. And Jeff Z, do you have a similar sense that the market is looking more fragile here than last week, for example?
Absolutely. I mean, I'm looking at the big boys as being a group of stocks, the FAANG stocks. When I say the big boys, I'm talking the big boys, big market cap, getting whacked. People are coming for those companies. It used to be the Democrats wanted to break them up, and now the Republicans want to break them up. And guess what? When everybody wants to break them up, they get broken up. So I think there'd be a long-term risk of real regulatory scrutiny coming down the pike. If you look at Twitter today, stock's down over 6%. Facebook's down a couple of percent. These are the stocks that are getting whacked today. This is the reason the market is down today. So market gets led up by stocks. It gets led down by stocks. If it's the same stocks that led you up that start cracking, look out.
You bet.
And I just wanted to add to that, just to kind of tie up what Adam and Jeff just said. In terms of momentum levels, when you're looking at market internals right now, we are at an 11-year high on momentum levels on the NASDAQ 100. We are seeing very strong divergence between a lot of the momentum oscillators and the NASDAQ 100 and the S&P, but not the Russell 2000. So not just fundamentally, but technically, the picture is very, very similar to what these guys are talking on a different level. So when you have that together, it's very meaningful, James, in my opinion.
Well,
sure. On the question of the
sorry, one last thing. I just wanted to complete what I was saying. You know, everybody likes to talk about rotation, but when you have 4 companies that are worth over $4 trillion start to get smoked, it doesn't matter if people are buying JCPenney and the stock adds $200 million of market cap or whatever. You see what I'm saying? The market is top heavy on the way up, and it can be top heavy on the way down too. So it's really important to pay attention to what the largest cap, highest beta stocks are doing.
Absolutely. Absolutely.
Okay. So let's then discuss a defensive posture in that context. Roger, do you have any particular ideas as far as sort of a hedge strategy?
Yes, there's actually several. One way, and a classic way, is to add your long-term bond to your portfolio. Now, a lot of traders are thinking, well, you know, Roger, long-term bonds just broke down. It's true. They are breaking down just a little bit. It means interest rates may be tinkering higher in the long term. But I'm going to tell you, every time, and I mean literally every time, historically speaking, when the market starts heading towards that, when the S&P or the NASDAQ starts heading towards that 200-day moving average, what do you see? You see a rally in the TLT or the TMF bond. So it's really, really important to realize that the bond market is very sensitive to the stock market. Another one, and we've talked about this here. I know that Jeff's in an area. I know we've talked about here many. Gold. It's not the worst idea to have gold in your portfolio, because when stocks go down, gold tends to spike. Another way to deal with this uncertainty is what I've been saying for the last several weeks, is to move away from individual stocks and into ETFs and to lower your exposure. So diversification adding a defensive asset to your position, adding a non-correlated asset to your position, adding an asset that will move inverse to the stock market to your position, lowering your exposure in the stock market and moving partly into ETFs and partly into cash. All of these things all together, or just one of them or two of them, will give you a much better diversification and a much better risk-adjusted returns. And I think that's the biggest key here. Not returns, but risk-adjusted returns.
Adam, so in terms of that sort of defensive posture, I want to just run this by you, and I'm going to come to you with this too, Jeff. Gold, for example, today is, it's sold off. It's back on the lower end of its range for the last year, which struck me as extremely counterintuitive considering all of the volatility in Bitcoin, the imminent stimulus, the additional stimulus that Biden has already been referencing upon his inauguration. And so I don't understand how anybody could be selling gold, even in the context of a shorter term trade, given the risks of massive debasement imminently. And so what's your take on the price in the gold action?
Yeah, James, I think it's a really good point. What you're seeing, a lot of that that safety net, if you will, I believe in the last few weeks moved money into Bitcoin and not into gold. That was good for a little bit of time, but right now, even today, we saw gold was down on the day. I believe now it's up. I think gold itself is one of those assets which will be, when it's back in favor, it's going to go up more than anybody believes because of all the reasons you just outlined. Plus, it's a real thing, right? Bitcoin. I'm bullish on crypto, so don't misconstrue what I'm saying here. But gold is a physical, tangible asset. You can hold it, you can feel it, you can mine it. It's in the ground. You can all that kind of fun stuff. So the inherent value, if you will, in gold and having gold in your portfolio, it's one of those things that just doesn't go away. In fact, it gets even stronger because there's a finite amount of gold available. So I think gold is still a very long-term, very good play. Remember, gold had a huge move in 2020 that most people, it fell under the radar. I mean, gold was a great asset to hold and to own, especially in the middle of 2020. And it had a huge move. So now it's just pausing for the last few months to digest that move. And I think what we're seeing here is perfectly normal and healthy for the longer term outlook for gold.
And Jeff Z, do you concur with that? And are you still long gold?
I am not long gold because I think that when you get the risk off atmosphere that we're going to have in that short period of time, when the real selling happens and you have people getting margin calls, they sell gold also. I think in the aftermath of that, you want to be long gold, but I think in the short term, it doesn't act quite as tight as a protection for your portfolio as a lot of people think. What Roger said in terms of lowering your exposure, diversifying away from big stocks, what Adam said as far as owning puts in certain very targeted areas is really the only way you can really defend against broad-based selling that happens when billions and trillions of dollars start to go to money heaven.
So what's your take on the gold price action, and what are you advising in terms of a defensive strategy in this environment?
I tend not, for the defensive strategy aspect of it, I try not to get too fancy with it. I mean, Roger mentioned, you can buy TLT, which of course has been losing ground. And obviously if we do see a broader market sell-off, as he said, I would expect to see a broader move back into bonds, whether it lasts for weeks or months, of course, remains to be seen, and just depends on what the overall market does. I like the idea of just looking at more individual stocks, and to go back to what Roger said earlier about looking at low-hanging fruit, with the just general idea that the stocks that are already more or less out of favor or haven't run up that far in a sell-off of some kind may fall, let's say, 15%, while a lot of the other ones are going to fall 30%. And that's the general rationale. So at this point, I would just stay with it and basically adopt the attitude that the melt-up continues until proven otherwise, because it's just the degree of volatility. If it comes, you'll know you'll know when it happens, and you might as well not try to anticipate it too much until it happens, just because these things just can get nuts. Regarding gold, here's what I'd say. I'm a little disturbed by it, not from a long-term perspective, but I think, as Adam was noting a moment ago, I think what we're seeing here is just it may keep pressing lower, and with the idea that it may push more people into the bear camp, and you just have to sort of keep an eye on where the sentiment is regarding gold. Ideally, what I would love to see is Bitcoin here and gold down here, and maybe at some point when the turn comes, and it will come at some point, but when the turn comes, money flows out of Bitcoin, and maybe gold will become part of that safety trade. But like Jeff C was just saying, it's just hard to know. You just kind of have to just watch the action when that happens, when the big sell-off happens, and then react accordingly.
Yeah, I found it intriguing that government agency, was it the FCC or the FTC, had issued a warning to Bitcoin investors that reminded them that they better be prepared to lose all of their money. And, certainly the volatility could wipe out one's entire position if one responded emotionally to the gut churning ups and downs. But Jeff Z, do you think that there's what's the volatility range in Bitcoin from where you sit as a trader?
Oh my gosh. I mean, it's off the charts. It's off the charts. I would say that it's probably triple, the highest beta NASDAQ 100 stock. Would be a rough estimate of what it is. I mean, to have a 10, 11%, 20% move in one weekend be casual. To put it in perspective, if we opened Monday, the stock market down 20%, it would be Black Month. They would call this day Black Monday for the rest of our lives. And for Bitcoin, it's just another normal occurrence. It's part of the deal, which is why I laugh a lot of times when people say, this is how I store my wealth. And it's like, I don't like that kind of fluctuation with my wealth. I like to punt. I like to speculate, but my wealth to move like that, as my 7-year-old likes to say, no, thank you. But in terms of gold, longer term, I mean, think about, James, you touched on something really extraordinary. When was the last time a federal agency said that prepare to have your entire gold portfolio go to zero? I mean, it's so remarkable that could even be something that people could say and it be within the realm of reality. I mean, think how extraordinary it would be if they said your Apple stock could be zero.
Yeah.
They're talking like that about Bitcoin. That's something people have to consider, right? Like that it's right. You don't know. I mean, I'm bullish on it long term, but the fact that the largest financial regulator in the United Kingdom had that to say, it's extraordinary.
Yeah. Roger, did you have any response to that?
I couldn't agree. I could not agree with Jeff more. I mean, the volatility is just insane. It's one of the stocks that I do not like to trade, and I hardly ever recommend it, is Amazon. I've never had a good feel for it because it's such a monstrous stock in terms of volatility and its trading range, and it's expensive. And I'm kind of, when Jeff was talking about Bitcoin, I couldn't help but think about Amazon and my feelings towards Amazon. And I know it's apples and oranges, but I'm just talking about from a perspective of size and volatility. And Amazon would probably be like comparing GE. It would probably be like comparing GE to Amazon. So yeah, I have a very, very different theory to cryptocurrencies than I do to all other tradable assets. I think cryptocurrencies are going to have a huge part in the world economy, in the financial markets, in the tradability, maybe 15, 20 years, 10, 15, 20 years from now. But I don't think we're there yet. And I think we're trying to we're trying to create or look at it from a perspective where it's just not simply mature enough, and which is why it's so speculative and has so much volatility. So the way I'm looking at cryptos is exactly how I would look at penny stocks. I would give them no more value than that. To me, it's a complete speculative asset. It has no investment properties as of yet, and we are way too early to make heads or tails with it. Again, to me, it's like the internet in 1993 and 1994. That's where we're at right now. It's going to be an amazing thing We're going to use it for everything from watching movies to communicating to doing it, but we're just not there yet. That's my view on cryptos.
Sure. Adam, would you concur with the idea that there's more of a future in other utility coins such as Ethereum that have characteristics that make it more utilitarian than speculative? Do you think there's more of a future in cryptos like that than there is in Bitcoin? And if not Ethereum, are there others out there that we should be looking at?
Yeah, there's a lot of utility coins that are out there. I think the idea behind blockchain itself is a massive disruptor. And to Roger's point, it reminds me of the EV trade, like Tesla 10 years ago or 5 years ago with Tesla. And now all of a sudden, EV has reached its almost the crescendo where now it's just shooting up. You've got electric gas stations have gone public. You know what happened today, NEO with China's version of Tesla. And EV is now becoming a reality, but we're still years out before it is on Main Street. It's becoming more accepted a reality on Wall Street, which is an excellent point Roger just made. So I think with respect to crypto, and James, to your point as well, yes, the blockchain itself will have massive disruptive powers. I don't think that's a question. People have now begun to accept that. They understand it. Now the question is, how do we actually go from that thing, and it looks good in paper, it looks good in theory, to actually applying it in a way that works for not just people using it, but also for regulators. We have to understand that Bitcoin is still a massively unregulated arena, for lack of a better word. We saw what happened just a few weeks ago with Ripple, which was one of the cryptocurrencies that got crushed after the SEC came after them and said, hey, there's some issues there and ... Remember, governments exist, like them, don't like them. They have regulatory bodies. I mean, that's just a fact. Every major financial market in the world is regulated, exchanges, so on and so forth. Crypto, it's one of those, it's a massive disruptor, no question. It's been the biggest disruption in the currency market since the euro over 20 plus years ago. And could it disrupt some more? Yeah, I think the answer is absolutely yes. But there's a disconnect between where we are today, how fast that will become a reality, and then how the institutional community will adopt it in a way that works for regulators. And I think that's the big question mark. And until that's answered, there's going to be a lot of volatility, to Jeff Z's point about, hey, 20% overnight losing your wealth. And it's more than 20. If you go back and look at the high from just a few days ago to the lows, and you go back to Bitcoin over time or any of these cryptocurrencies, they have moves down that are mind-boggling. They make the dot-com crash in the NASDAQ was, I think, 70+%, or I think the NASDAQ crashed somewhere in that area, 75, 80%. Bitcoin's done more than that several times. It's recovered every time since, but you've got to really understand that you're getting in the really early stages of a potentially massive disruptive playing field that nobody knows how it's going to unfold from a regulation standpoint.
Sure. I'm curious as to an opinion as to how if the identity of a nation and its stability is measured by the performance and the desirability of its currency as a unit of trade, how can a cryptocurrency with no sovereign backing possibly call itself money in the longer term? And who's going to provide that role of sovereign backing for Bitcoin, especially in this environment where developed nations are rolling out their own digital cryptocurrencies?
That's the other point of it, right? Not only is it's not backed by any government, but there's not enough Bitcoin to go around for everybody. If everybody in the world wants one Bitcoin, there's not enough of them, right? So I think there's 7 billion people and there's 20 million Bitcoin or something to that extent. So you've got to really ask, and there's no barrier to entry. If the 6 of us or the 5 of us want to start a cryptocurrency right now and do an ICO, not an IPO, but an initial coin offering, we could. And so could anybody, and so could anybody, and so could anybody. So the fact that there's no barrier to entry and there's no real official backstop, that leads a lot of major unknowns. And when people start to understand these realities, and to Jeff Z's points about, hey, you don't want to wake up and have your portfolio down 20% or in an hour, then you really have to ask yourself, what is the role that these cryptocurrencies have to play on a global arena?
Right. Wealth coin coming soon. Jeff, why? Do you have anything to add to that?
Mainly, we touched on this a little bit last week regarding Bitcoin and hedge funds. I mean, pretty much every hedge fund manager and his brother and his brother-in-law are into Bitcoin in a huge way. And, when I think of other, huge rallies, going back the last like 30, 35 years. You see this almost every time, especially in newer products, where there's somebody out there who's like all in, not just in Bitcoin, but on Bitcoin futures and all the Bitcoin options and everything else. And when there's a rough patch of volatility, it doesn't take much to push that trader over the edge. And then everything, again, in a worst case scenario, that's where everything cascades lower. I mean, we saw that in the real estate bust after the boom. And, we saw that in varying degrees in the late 90s when the Federal Reserve had to step in with a hedge fund. I can't remember the name of it, that went way off track. And long-term capital management, that was the one. And the Fed had to step in and basically add liquidity to the overall banking system because of this one hedge fund that had gotten just way over leveraged and out of whack and thought it was in this can't miss sort of trade. So, that's where these things happen. And you just don't know. Could it be that there's somebody out in China who's way in over their head on something like this? And again, when that turn happens, whether it's next week or next year, we don't know. But when that turn happens, they start selling, and that's where everything, we'll all be wondering, why is it going down so much? And it's usually these sort of cascades as everybody's trying to meet their margin call, so to speak.
Sure. Okay, Roger, reconcile this entire conversation with us into one pearl of wisdom for the week ahead.
I think the market is going to really tip its hand this week, maybe next week, and give us a good understanding of where we are in terms of the tone for the first quarter. My biggest fear is, again, that COVID is going to be a bigger problem than the solution the world has for it in terms of the reflection within the stock market. I know that sounded a little awkward, but basically my point is, what I'm seeing right now is I'm seeing kind of like that volleyball where the ball where you kind of prop it up and it keeps coming down and you got to keep propping it up. My concern is that we have enough hands to prop it up. Those people don't get sick with COVID. So the question again is, how fast are we going to see close downs? What are we going to see in terms of the economy and those two things combined? My biggest fear is that Biden, with a full Democratic office behind him, supporting him, is going to do a national lockdown, and that's going to wreak havoc on the economy at the expense of a lot of stocks. So my biggest fear is I want to see a pickup in the health of the fundamentals before we get too out of hand or too far into his administration. I think that is the biggest factor right now. And I'm also seeing a lot of very strong sector rotations. I'm seeing a lot of love, a lot of money moving into renewable energy, lithium stocks, and I'm seeing a lot of selling in traditional defense companies. So I think if we stick with the low-hanging fruits and not try to go too far in terms of our guesswork, I think we'll do okay. But again, the data at the end of this week is going to be very instrumental in giving us a good idea of how retail sales are doing and how the economy is humming along. So I'd like to see how this week trades to get a sentiment. But overall, technically, I'm not happy with the large caps, and I think that if we do see weakness, it's going to be a lot more targeted in the large cap NASDAQ 100 stocks, larger S&P tech stocks, than in the smaller cap stocks.
All right, perfect. Let's leave it there for now, gentlemen. Great conversation as usual. I'll come back to each of you individually throughout the week. Have a great trading week, and we'll talk soon. Thanks for joining us.